Marital separation doesn't just change your relationship status with another person, it can completely reshape your retirement plan. And what most people don't realize is that a divorce settlement today can cost them thousands of dollars in retirement income later. Hi, I'm Jimmy Williams, CEO and Senior Wealth Advisor at Compass Capital Management. And today I'm going to walk you through the process of how a divorce can impact your retirement plan and the financial mistakes you may want to avoid. One of the biggest financial disruptions people face in life when it comes to divorce is especially when that happens in your 40s, your 50s, even right before retirement. So let's break down the biggest ways that divorce affects your future financial plan. Section 1. Your retirement savings may be split in half. The first and most obvious impact is going to be to your retirement accounts that are often divided during the divorce process. This can include your 401k account with your employer, IRAs you may have held for your lifetime of work, pensions that are available through your work, brokerage accounts, deferred compensation accounts, and many others. But retirement savings is frequently one of the largest marital assets subject to the divorce. Dividing them improperly can create unexpected taxes and huge penalties. A legal document called a Qualified Domestic Relations Order, or QDRO, is required to divide retirement assets. Without proper planning, the financial consequences can follow you for decades. Section 2. Your retirement timeline may change. Divorce often forces people to rethink when they can retire and how can they retire. If your relationship is being impacted by divorce, your retirement savings may drop significantly after the proceedings. You may need to work longer than you anticipated, increase your savings rate so that you can prepare for that loss of funds, adjust your retirement lifestyle, perhaps delay your Social Security benefits to a better time when you gain more benefits over your lifetime. I've seen situations where someone planned to retire at age 62, but after divorce, their realistic retirement age was closer to age 70. That's why rebuilding your financial plan immediately after a divorce is critical to your success. Section 3. Social Security benefits can be affected. Many people don't realize that divorce can impact their Social Security strategies. For example, if you were married to your current spouse for 10 years or longer and you divorce that spouse, even if it's 20 to 30 years later, you may still be eligible to claim spousal benefits based on your former spouse's work record. The important details are you must be unmarried at the time of claiming these benefits. Your former spouse must have qualified for Social Security benefits, and claiming their benefit does not reduce what they claim on their own benefits. For many divorced individuals, this can become an important retirement income strategy, certainly one that shouldn't be overlooked. Section 4. Pension benefits may be divided as well. For example, if one of the spouses has a pension from a company in which they had worked many years during their career, that future income that was previously planned for their retirement may also be subjected to division in the divorce settlement. This simply means that a part of every monthly retirement income check you assumed you would receive could be much smaller because a portion will go to your former spouse. And here's where things get tricky. There are often multiple options for how each pension should be divided. For example, should I take a lump sum buyout? How about a percentage of future payments or survivor benefits? Choosing the wrong option can significantly reduce your retirement income. Section 5. Your expenses may increase. One of the biggest retirement challenges we face with our clients after a divorce is just simply math. Instead of income supporting one household, you now may have two households. That means higher housing costs, separate insurance policies for each of the properties, duplicate living expenses. Even if income stays the same, the cost of living typically rises. That's why adjusting your income retirement projections after divorce is so critical. One of the areas that's most important is Section 6, estate planning, and it must be updated after divorce. Too often, people go through the traumatic event of getting a divorce and then, with so much on their mind, fail to recall that their estate plan will need amending. Divorce requires these major updates to your estate plan. People forget to change beneficiaries on retirement accounts, life insurance policies, their wills need to be updated, trust documents amended, powers of attorney appointed. These are critical areas to help you function in life as you get closer to and through retirement. If you aren't updating these documents, a former spouse could unintentionally remain a beneficiary, and that's not something that most people want. And Section 7, you may need a new investment strategy. After divorce, your financial picture changes dramatically. Your risk tolerance may be different. Your income needs certainly will be different. Your tax strategy could be impacted. Your investment timeline may need to be lengthened. All of these areas may be different now that you've experienced divorce. For example, someone who relied on a spouse's income now need to take their portfolio and generate more consistent income for themselves over that long-term growth. This is why a portfolio review after divorce is essential. Some final thoughts regarding this important discussion on how divorce impacts your retirement planning. Divorce is not just an emotional transition. It's one of the most significant financial events in a person's life. And when it comes to retirement, the decisions made during divorce can affect your financial security for the next 20 or 30 years. The key is taking control of the financial planning process early so that you can rebuild a retirement strategy that still works for your future. We hope you found this information helpful. If you have, please make certain to like the video and subscribe for more financial planning insights. If you or a loved one is navigating the difficult streams of divorce, or you're simply rebuilding your retirement plan based on a life-changing event that took your life out of control, consider speaking with a certified financial planner professional to help you create a strategy tailored for your situation. Thank you for watching, and I'll see you in the next video. We're Compass Capital Management, your guide to helping you live life by your design.